Hi everyone, it's Rob Roy and welcome to the Elliott Wave Elite US market update. Going to take a look at the charts. The volatility continues here in the US markets. Last week we had talked about the fact that we had a clear-cut pattern here with the zigzag. I'm not going to go through and label everything. Again, we had this zigzag pattern that was then followed by a perfect flat pattern, which was the A, B, and C here, culminating about as perfectly as you can get with a doji there at the top of that wave C. So very common Elliott wave patterning. You have a impulse pattern, directional pattern, then a consolidation pattern. Again, as I mentioned last week, sometimes you have a consolidating triangle, sometimes you have a flat. But quite often you go through some sort of a consolidation following the completion of a wave 5. So now the question becomes, where do we go from here? Well, what's interesting is the one thing that we do know is that we have an impulse A here. So the beginning of this move is the A wave. The part that we don't know, and this is the difficult part of Elliott wave analysis, is it's almost impossible to forecast where an A is going to go. You pretty much have to let the A wave do itself, then you can trade from there. But what's interesting about this is two different scenarios. We could have this being the entire A wave that I just drew here, and it is curious that on the 10th of December we did break the low from the 29th of October, but we did not close below that low. So that doesn't really count in this analysis. We're still looking for support in this area. But what is interesting is if you look at the first 2 days followed by that third day, and we do a fib retracement, you'll be able to see that the move back to the upside that occurred on the 7th of December was a perfect 50% correction. So that went right to the 50% level, and then we headed back down. So the question becomes, is everything up till now the impulse A, or have we already had the A? And now I'll just spread this out rather than getting rid of it so you can continue to see that 50%. Or have we already had the A, which was just short-lived here, and then the bounce back to the upside right to that 50% level, and we're in the process of the C wave to the downside now. Either scenario is possible. It's going to be interesting to see which comes to fruition, but there would be the potential level for the C wave down here at the 100% extension. So we would be looking for an SPX, the cash index here in the US, somewhere in the area of 25.30. I've mentioned a couple times that we have not had that a massive cathartic type sell-off with huge volume. Switch to the SPY so we can bring volume into play, and you can see we've had well above average volume, but we haven't even had the volume that we had at the end of the A wave impulse back on October 11th. So it hasn't been that big massive down day just where everybody just gets scared, fear rises, the VIX spikes huge, and you have massive volume. That's what usually marks the end of a downward move. So we could possibly be, to go back into the other scenarios here, we could possibly be in the start of a new flat. So that was where I was talking about how important it was to realize that the support level area is here. So remember, the A wave is an impulse wave, whether it's in a zigzag or a flat. So we have the A wave impulse, we know that. We don't know if it's over with yet. We will know in the next couple of days, though. If we head down lower, then we know where our target is. We know that our target is down here at the 25.30 area. And if we bounce back past this 50% level and past the 61.8% level, then we know that we are in another flat and we've started to build a wide trading range in the markets. So A lot of questions are going to be answered here in the not too distant future. Looking at the VIX, we talked about this last week where we had this large descending triangle, and it sure looks like we're trying to break out to the upside there. Now that could lead towards that point that I was making where we haven't had the big massive low with huge volume and panic selling. We would need a VIX to spike up, and I'll condense the charts, but back over like we did back here in February, in the lows in February. That's the kind of thing that I'm talking about, which we have not had yet. And with the Elliott wave on here, you can see that we are still in the consolidation patterns, which you would expect in a triangle formation. So descending triangle that looks like we're breaking out to the upside, and well, we'll see if this blast to the upside here, but we've already broken out of this. The only other thing that could occur now is that this is a false breakout. It cannot be a continuation of the triangle. That's not a possibility at this point in time, so we're either going to blast to the upside on the VIX, or it could prove to be a false breakout because we didn't get the follow-through day, and head back down and actually break to the downside. It doesn't look likely, but it's a possibility. I wanted to show you the U.S. dollar. Again, we talked about this last week where we had the consolidating triangle following that wave 5, and we mentioned that we could break out and continue the wave 5, or we could break back down because we were right at an important fib level here, the wave 5, and test this previous 4. I would think that based on what's going on with interest rates, etc., that the dollar probably wants to go to the downside, but as you can see in today's trade, it moved back to the upside nicely, so it looks like we're going to have a continuation of the wave 5, and here's the reason. What's going on over in Great Britain? Here's the pound, and you can see that it is sinking with the chaos that's going on over there with their Brexit, trying to get their act together, and it looks like Theresa May be in trouble now, so we'll see how that plays out, but it's really putting a hurting on the pound, and that's propping up the dollar. So even though you would think without all that going on, the dollar would probably be headed lower, that's helping to hold it to the upside. And we also look at TBT here, and remember we had our triangle, again, the pattern of the consolidation and big, huge move to the downside. That wave 4 is disqualified at the next fib level of 78%, but we know that we already had the triangle pattern. This turned out to be a great position, really nice gain. The puts obviously making all the money out of this position, but this is why you don't take off half of the strangle, and this is why we always preach about, or why I'm always talking about that follow-through confirmation day. The big move was not to the upside. You would have been tempted to take off the puts and let the calls run, but the big move was actually the downside, and the profit in the position was made out of the puts. So really nice gain out of that strangle using the delta and the gamma that we talk about over and over and over again. It's just putting the math in your favor. Looking at our other case studies that we've mentioned, MasterCard, interesting thing here. It's gotten back up into this consolidation where the wave 4 was before. We showed last week this big move to the upside here. And now the question is, because we filled the first gap, see, we filled this gap, now we need to find out, is MasterCard going to come down and fill this gap? If the market were to get weak and we had that big sell-off, then that could happen. Or is it going to continue to the upside? But certainly got to keep an eye on that gap because, as you know, gaps get filled. We don't always know when, but they get filled. Next is Unilever, and again, the consolidating ABCs, which go along with the triangle. Now, what I wanted to show you here is the fact that we thought, or it looked like, that this was the original triangle pattern, and then we're just kind of going sideways here, but that doesn't happen. When you have one of these triangles, you can have a false breakout, just like we did with TBT, but you're going to get a breakout. You're going to get one of these breakout moves. They don't just go sideways out of a triangle, but what does happen at times is you form a larger triangle. And that's what's occurring here, is that we have a much larger triangle. Now, the good part of this is when it breaks, pardon me, it usually breaks larger. The negative with this is that it just takes patience to wait for the breakout. But hopefully you put plenty of time in your positions, as we do, because things don't always go like clockwork, but they usually do what they're supposed to do, and that's the bottom line, and that's the most important thing in the end. So we're just building a larger triangle here. So just a little more patience to wait for that to break out, but the pattern's actually even better than it was before. The case study that we added last week just continues to power ahead, even in this crazy market. So we're to the downside here, right at the bottom of this trading range, or beginning the wave C lower, either one. But to see this with the bullish indicators that we have programmed into Integrated Investor, it's just amazing what you can do with this program, and that the searches you can create, and just, you know, spending time doing it. And we have this big move to the upside here in a wave 3 with all this stuff going on, and it powered higher throughout the week. Pretty amazing stuff. Still constantly amazed after 20 years of doing this. It's just amazing. Okay, so the new case study to look at this week is OGS. One gas. Now this one's a little different. This is a wave 5. It's 142% extension, which is in between the 100 and the 161.8 fib levels. It would likely go to the 161.8 fib level, but it doesn't have to. I want to make sure I'm clear on this. It doesn't have to do that. It's just a possibility for it to go there, because it's already done what it's supposed to do. But then when you look, and this is one of the confirming indicators that I look at, is money flow. And the green is obviously money moving in. You can see there's lots of money moving into this stock. So perhaps this will be one that's going to defy what's going on in the market, just like P&W is, and continue to the upside. But we'll watch this one. This one's a butterfly, so that we have lower risk. Remember, we like to do the butterflies in the wave 5s, especially less risk, greater potential return, and especially because we're kind of in no man's land between the 100 and 161.8% extension. But pattern looks really good. It's done real well considering the market as well. So we'll see how it plays out. So that wraps things up for this week. Again, very interesting times in the market, fun times in the market. The volatility just makes trading so much fun as things move quicker and quicker. If you haven't gotten your data updated for your or renewed for your Profit Source or Integrated Investor, get that done so that we can continue to identify these great case studies together. Take care, everybody.